Introduction. Hello and welcome. If you're watching this video, chances are you're interested in buying your first house. Congratulations, that's a big step. But before you start browsing listings, it's important to understand how much you'll need to save in order to afford a house worth $300,000, given your annual income of $60,000. First things first, let's talk about the down payment. The down payment is the amount of money you'll need to put down upfront in order to secure your mortgage. Typically, lenders require a down payment of 20% of the purchase price of the home. So, for a $300,000 home, that would be $60,000. That may seem like a lot of money, but don't worry, there are ways to make it more manageable. One option is to take advantage of first-time homebuyer programs. These programs are designed to help people who are buying their first home by offering things like down payment assistance or lower interest rates. Depending on where you live, there may be state or local programs available to you, so be sure to do some research. Another option is to save up gradually over time. Let's say you want to buy your home in 5 years. That means you'll need to save $12,000 a year, or $1,000 a month, in order to have the full down payment by the time you're ready to buy. That may seem like a lot, but if you break it down into smaller chunks, it becomes more manageable. For example, you could set up automatic transfers from your checking account into a savings account each month, so that you don't even have to think about it. Now, let's talk about the other costs associated with buying a home. In addition to the down payment, you'll also need to budget for closing costs, which can range from 2% to 5% of the purchase price of the home. That means for a $300,000 home, you could be looking at anywhere from $6,000 to $15,000 in closing costs. Again, there are ways to make these costs more manageable. Some sellers may be willing to cover some or all of the closing costs as part of the negotiation process, so don't be afraid to ask. You'll also need to factor in ongoing costs like property taxes, homeowners insurance, and maintenance costs. Property taxes vary depending on where you live, but you can usually find out how much you can expect to pay by looking up the property records for homes in the area you're interested in. Homeowners insurance is also something you'll need to budget for, and the cost will depend on factors like the size and age of the home, as well as your credit score. Finally, you'll need to budget for maintenance costs like repairs and upkeep. As a general rule of thumb, you should budget 1% of the purchase price of the home each year for maintenance costs. Conclusion. So, how much should you save to buy your first home worth $300,000 with an annual income of $60,000? The answer will depend on a variety of factors, including your timeline for buying, your location, and your personal financial situation. However, a good rule of thumb is to aim for a down payment of 20% of the purchase price of the home, or $60,000 in this case. You'll also need to budget for closing costs, ongoing costs like property taxes and homeowners insurance.